Andy, would you mind talking about the wider landscape of support and where CBILS fits in? I'm then going to talk around the detail of the scheme and the various bank-related schemes that are around, and also the new bounce back loan scheme that should go live next week.
Thank you, Peter. Just a few words of introduction about myself. I can't match Peter's 44 years as a banker, which is an absolutely extraordinary achievement. But I did a meagre 35 years myself, and I left banking in 2015. After 35 years, it was kind of enough for me. I'm a chartered banker by profession. But it was an opportunity to go and do something else. At what I got up to in the bank, I was all the time working with business and commercial and corporate customers at Peter's kind of level, regional director type level, and I also did some roles in head office. So between us, we've got about 79 years of banking experience. And apart from COVID, I guess we've probably seen most things. We've had our fair share of recessions and recoveries. And I've got to say, listening to the comment earlier, we've seen most things, including where selling personal mortgages appear to be in priority to selling commercial loans. So, you know, we've been there, we've done that. I'm now leaving the bank. I took a bit of a sabbatical, which was absolutely brilliant. And then I've started my own business in consultancy. I work in particular for an organisation based along the South Coast, but it's based up here in Surrey as well, called Business South, which is a representative organisation for a business community, particularly large corporates, universities, public sector. And I do that. I'm semi-retired. I work 2.5 days a week on that. But very recently, I've been seconded into the Enterprise M3 LEP to be effectively their banker in residence to help them and their understanding of the schemes that are coming down and how they can support businesses, but also take feedback from businesses so we can feed it into BAYS on a weekly basis, which is the government department looks after business, which goes into central government. So that's my role at the present time, and it's really great to be here this morning. I've got a few slides. Peter and I, we did talk these through yesterday, but Peter's going to give me a big thumbs up when he wants to interject on the slides, because I think that's probably the best way to do that. What I wanted to start off with really is a bit of context on where the business interruption loan fits into the overall landscape of support for distressed or distressing business during the current COVID emergencies. And this is where the Chancellor keeps saying, actually, business interruption is just one part of it. We've got all this other stuff, going on. And before I start, I think everyone knows there's gaps in this. The Chancellor knows there's gaps in this. But piece by piece, some of those gaps are being filled, but there are still gaps, and I'm sure we'll pick some of those gaps up later in the session. So just going round, you know, we start with probably the most unreliable one, where it should be the most reliable one, business interruption insurance. Not a government support, but many businesses had that, and there's claims processes ongoing. English Lawn Tennis Association was the champion case of having the right one, cost them millions of pounds, but other businesses thought they had business interruption insurance, but may not be as valuable as they thought. Chancellor's also done some changes to insolvency law. He's picked up issues in terms of wrongful trading and suspended that, which means that aspect of running a business in distress, where you're getting into difficulties, is suspended for a while. There's some sector support out there, and we're seeing some of that. And this is probably going on at the major corporate levels. And you're hearing about conversations between the airlines and the government. You're also hearing conversations between, say, Tata's Steelworks in Port Talbot and the government, you know, particular sector support. You are seeing also some funds emerging for high growth startups. And Monday last week, We seem to have schemes coming every week now. There was a future funds initiative announced, which is particularly interesting for our high growth startups. And we've got a number of them in and around Guildford, where there's some matching support. So that's a really interesting scheme in high growth startups. So you've got clients in that, please look at the future funds and its partnering fund, which is the innovation fund in terms of that. So there's some interesting stuff around that. I'd encourage you to keep an eye on that. So we've got VAT deferrals, time to pay. You'll all be familiar with those. We've got business rate reductions or holidays, and you'll all be familiar with those. We've had some changes to sick pay. We've seen the cash grants, and this is probably, again, at the smaller type business end. Latest figures are quite interesting. 500 business properties are involved in that, and £6 billion worth of grants have been handed out. Thinking about that more locally, if you look at a borough like Waverley, which is Farnham, Hazelmere, and Godalming and around that area, they had £26 million worth of grants going out to small businesses. So this is decent money going into the sector. It does break down, I appreciate that, but there's some significant money coming in. And penultimately, we are seeing some changes to laws on tenants and landlords, and that seemed to be picking up momentum last week, and ministers were promising even more measures to actually support tenants, but obviously there's a knock-on effect here. You support tenants by saying to them, you've got a 3-month rent holiday. Consequently, then you've got a landlord saying, hang on a minute, I've not got any income coming in. What about all those loans that I've got to repay? So I wouldn't say that's the rule of unintended consequences, because that's something that's got to be thought through. But you are seeing government basically look at that particular area, and I think there's more going to be coming out on that. Penultimately, I did say the job retention scheme, the furloughed scheme, which is probably one of the most popular schemes that I'm hearing about. Popular as not everyone's singing and dancing about it, but basically quite an accessible scheme that's been introduced by government to actually support the employee aspect during the COVID crisis. And significant numbers of people are going through that. Latest I've got from government, which I don't quite understand the stat on it, apparently there's been more than 500,000 claims so far. And the scheme opened on Monday for 4.5 billion, and I think we're really only at the start of that in terms of that. So another big thing that's going up. So the point I'm making is that business interruption loan and the bounce back loan, which we're going to cover, fit into that overall context. And when you are applying for the loan, I guess bankers are looking about, well, how much of this landscape have you drawn on so far before you get to the point of the business interruption loan and the bounce back loan? Peter, should we take the next? Oh, Peter, come in.
Okay. I'll give a little bit of an update on the schemes that involve banks that are active at the moment. For larger businesses turning over 45 million plus, there's the larger business loan scheme. That offers up to 50 million of finance. And I understand that 15 billion has been taken by larger businesses. There's 10 accredited lenders, and it's quite similar to the CBILS scheme. New information on Monday/Tuesday this week was the bounce back loans, which I find very exciting in terms of what we've been told. A new micro loan scheme, quick and easy, maximum 25% of turnover up to 50,000. Said to be quick, simple, standard format, and said funds to be available within 24 hours of approval. 100% guarantee from the government and a standard interest rate. No forward-looking test of viability. and no complex eligibility tests. I've also read that you can't have both of a bounce back loan and a CBILS. So I would say that if a business thinks it's going to need more than £50,000, it should first invest the time applying for a CBILS facility. But again, you know, we haven't seen the detail of this, and when we do see the detail, that will be one of the factors I'll be looking for, because in my logical sense, if you took 50,000, this thing goes on a little longer, you might need some more money. But we'll see what comes down. The CBILS main scheme, which is the sort of heart of what we were talking about today and the heart of what banks are currently offering, was launched on the 23rd of March. It was then revised on the 3rd of April, as some very important revisions to that. And the Chancellor advised that there were going to be some technical tweaks, technical and regulatory tweaks this week, which again, hopefully, when the detail comes through, will make it more accessible. Immediately, one would say that, you know, having been in the bank, I could say that this scheme was got up and running in its format within a sort of 6-day period, rather than 12 to 18 months, which is the normal time for any sort of scheme to be up and running. To me, it follows the EFG, Enterprise Finance Guarantee Scheme. It also has to fit within state aid rules and EU rules, which sort of box it in. So scheme details: term loans, overdrafts, IF asset finance, up to £5 million worth of funding. And I know that a £5 million loan has been agreed locally for a customer. Turnover less than 45 million. And 3rd of April, those first set of changes clarified the position, a couple of important positions. The first of which was that prior to then, the banks were required to look to see if customers had any other form of security and go to that first. Difficult for customers to provide security when you can't get a valuer out to value a premises. Difficult for a customer to give security when you know, solicitors, land registry are all backed up. So that clarified no guarantees at all, personal guarantees, personal security up to £250,000, and above that guarantees could be taken, but would be limited to 20% of the losses. So it was a limited situation, and private residences were not allowed to be taken as security. So that was helpful. Good, no fees for the first 12 months, no interest for the first 12 months, as I say, good. Less good was after that 12-month period, the repayment horizon is 5 years. That can cause viability issues because some businesses, you know, may like to repay it very quickly, may not have the capability at the start to repay it quickly. So a longer period to repay would have been helpful, but that's not permissible under the scheme. It's UK-based, business has got to be 50% trading, and it's not for export activities. There are some sector exclusions, and there are exclusions for businesses that are in difficulty. And the definitions of that are on the British Business Bank website. And Andy and I were talking yesterday, that's like a golden source for us of information, because all banks have to abide by what the British Business Bank says. And it's very clear on that there must be a proposal, a borrowing proposal, which the lender would consider viable were it not for the pandemic. And the question then becomes, and I'm sure in Q&A we'll talk about viability, but how do you measure viability when no business is viable at the moment? So the test has got to be where the business was prior to the pandemic. So it's 2018 accounts, it's 2019 accounts, it's management information. And how do you then test the viability? You look potentially at how borrowings can be covered by the earnings before interest, tax, depreciation and amortization. Perhaps of 2 to 1 would be the classic textbook definition. So it's clear that the way the scheme is set up by government and by the British Business Bank, it is not a blanket to cover viability problems. It is a blanket to cover a situation where a business hasn't got security. Now, the Chancellor's conversation on Monday was very interesting, followed up by something Andy spotted on a briefing that was sent out. And that was that he was looking at taking additional steps to speed it up. The removal of caps for banks, meaning that banks could lend as much as they wanted under that scheme. And I know that the bank that I was employed by had gone up and got an extension already. And also the need to look at post-COVID viability, which is very difficult. Business viable? No business viable at the moment, unless you're and would it be viable afterwards? That was very difficult to test or come to an assumption on. So if they remove that post-COVID viability assessment, that will speed things up because that took a long time. Big question in my mind though, do businesses want to get into that additional element of debt? Because it is debt and it has to be repaid. And there are a number of businesses we were speaking to that just didn't want to get into debt. They just didn't want to. It is for COVID-19 purposes, and businesses have to, sign off that it is for COVID-19. Because it is all tied up with state aid, there is a lot of paperwork that needs to be filled out. It's not for people, and we did see a few of these with entrepreneurial vigour who thought that their next great idea could be funded when they hadn't been impacted by COVID-19. Early stage and startups, the British Business Bank does refer to its startup loan scheme. And I would suggest that in terms of the full detail of the scheme, look at the British Business Bank's website. 40 lenders initially, expanded to 52. And for the larger facilities, the British Business Bank says management accounts, cash flow forecast, business plan, historic accounts, and details of business assets would be likely to be required by the banks. But for smaller businesses, it may not require the same. And the vast volume of businesses probably will go in online to access this with banker in the background trying to help them out. So 2 ways in that I've identified this, where you've got a relationship manager, it's a conversation with a relationship manager. Where you don't have that, it's an online application process. Andy, do you want to talk about where you see us now in terms of the loan scheme? We can then go together on some observations of what we've seen so far. Would that be all right?
Yeah, if you pop on the next slide, it probably gives a little bit of that. But can I just emphasise one point that Peter's made there? And I know we've got a few accountants in the room, but the change, there's been a whole host of changes made along the way here that Peter's gone through since the launch. But the change I think that came on Monday was very significant. And I think the fact that what the government and the British Business Bank are saying to access the guarantee on the bounce back loan and also on the business interruption loan is that there is a working assumption now that if a business was viable pre-COVID, they will return to viability post-COVID. Now, what we were seeing in the banks prior to that is applicants having to produce a significant level of forecast to demonstrate that they would return to viability. And obviously forecasting in this environment is incredibly difficult. And banks were kind of looking, or best case, worst case, normal case, that. But now, just to stress, the working assumption is that a pre-viable business will return to viability afterwards. So maybe that's something to just contemplate during the questions. So the landscape we've got at the moment is, and I think Peter hinted upon it, this moved very, very quickly on us all, and particularly on the banks. And I think what happened initially is that the banks became absolutely swamped with all stages of the process of the business interruption loan. And I sit on a group with other banks, so this is how we're collating this. So if you can imagine, as a business, immediately their telephony was swamped, their application process was swamped, their sanctioning was swamped, and on top of that, we had applicants starting to chase replies, which were stuck in the system, and consequently there was processing and drawdown issues. I'm seeing, I've got to say, and I'm hearing reports that some of the portfolio of the banks are beginning to see a little bit more order in terms of that. The issues remain, I think, in the small business territory, and we'll pick that up, I'm sure, onto questions. We've heard quite a lot, and you would have seen in the press, the Chancellor's mentioned a lot of banks reconfiguring to meet demand, moving resources around, and we are seeing, I guess, reports of where banks' business models are just not reacting quickly enough to this. Some banks have taken all business managers out the local branches and centralised everything, and that's causing problems. It's causing difficulties because you're relying on telephony. They were working over the Easter weekend. There's been reports of quite a lot of bureaucracy with the British Business Bank signing off individual cases. You know, I'm not quite sure the reality on that, but I think they've got the message that they need to do that. I put on a higher agreement rates. Certainly some banks are reporting up to 95% agreement rates on this. The press are reporting 50%. So we've got a lot of differences in take-up on that. And I'm sure Peter later on will hit with his views. I think also what the banks are seeing is very high take-up rates for this facility. Recognising that this COVID emergency is impacting on a wide sector of businesses, not necessarily the businesses you would immediately think about. So this is an economy-wide hit. Hence, businesses are looking at this to how do we protect our cash flow over the next 6, 12, 36 months. The request for support from the banks, and I'm sure Peter will reiterate that on behalf of the banks, the request is you need to order your thinking before you approach the bank. Get your house in order, get your application process together, try to think about reducing pre-application queries and inquiries. Most of the information the banks have got is actually out there. And I'm going to show some links in a minute to the British Business Bank site, which I think is I would encourage you, that is the go-to site for information, because you're going to the horse's mouth to pick up the information on there. There's some great case studies on there. There's actually a really high-class case study where an applicant has written a proposal where everyone else can just fill in the gaps and take it to the bank. It's a bit swotty, I've got to say. I didn't see many of those as a bank manager, but it's a really good example of how you can do it, and that to improve the quality of the applications. Peter, can we have the next slide? And I just
also.
And then it'd be great to get you in on this as well.
Thanks, mate. Yeah.
I think what the banks are telling us, they're seeing 3 categories of applicants coming forward. And these are in degrees of difficulty. The first group that's coming forward are loss-making businesses prior to the emergency. That is the most difficult to deal with. Now, these could be businesses that are in the distressed parts of the banks already. They are probably, well, probably by definition, they're losing money pre-COVID. And they're very, very difficult to support, even in the best of times. Some of these accounts would have provision marked against them already. So you really wrestle with that particular group, but they are the ones who would be feeling the emergency the quickest. Second group, which is probably the biggest group, are viable businesses prior to the emergency with short, medium-term issues to resolve urgently. And that is quite a wide-ranging group, right the way from small businesses, micro businesses, up to major corporates. So that is, I would regard as mass market, and the ones we need to get to quite quickly, and almost the ones that COVID business interruption scheme is designed to. Then finally, we've got the third group, which are viable prior to the emergency, but have sufficient reserves to allow them to continue in the short term, but who require support in the medium term to alleviate cash flow problems. So their problem is not now. They've got reserves to rely upon, and they may well be using the other packages that the bank has got available to them, including the government's got available to them, including the furlough scheme. But there will be a cash flow gap emerging downstream. So there's a way that the banks can prioritise those, but that is not to say that they will need support. Peter, do you want to give your observations on those three groups? What you
yeah. I mean, I think from my experience, Andy, we saw a lot of the group one, the businesses that already had some issues, really, really coming in quickly, understandably, and seeking help. And this was with the actual bank managers themselves, the commercial bank managers. Plus, we saw at that stage a number of people coming in with entrepreneurial ideas, not really COVID related. That was a sort of rush at the start, which were difficult cases to look at. I think we are now in the second phase, if you like, with those businesses that had good businesses but do need support. I think a mix of the second and third stage are businesses that realise that actually the scheme is open from April to September to be applied for. And therefore, they've got the time to put this together and put it together properly and really consider what the need is. You can, incidentally, have more than one CBIL loan. And, you know, as I said before, a CBIL loan may be a bridging type facility in my mind against a business that's got security and actually wants to borrow it over a very long term and therefore ease the repayment aspect. There's also businesses starting to think about, well, in the new normal that comes, be it 3 weeks, be it 6 weeks, whenever, how do we get out of this? And what do we need to get out of this? And so that third group, I think, will come to the fore in terms of businesses applying through the scheme. Some stats that we talked about yesterday, and the Chancellor talked about on Monday. 20,000 CBILs have been agreed, and that represents about 3.5 billion of funding, and 40,000 are in course. The Chancellor said an 80% approval rate. So it is motoring, some obviously not as fast as everybody would like and what we would like, but it is picking up speed. And it also comes down to, do businesses actually want the support? Thanks, Andy. Was there anything else I mentioned yesterday that I should talk about today?
Well, we've got a few questions coming through, but we've got one more slide to go. But maybe, okay. Peter, just to add a point on the mass market here, which is the viable businesses prior to emergency, and this wide range, where the help is coming from to the banks is the bounce back loan will hopefully take a chunk out of that particular group. Where businesses are wanting the smaller type loans, and where the simplified process of the bounce back with its shortened application and easier process. I'm saying that, we haven't seen it deliver yet, it only launches next week, but that's the principle, that takes a chunk out of that particular queue that we've got building up there. And I think that would be good news, and that will release resources to look at the more complicated type proposals that are coming through, or ones where 50,000 is not going to be enough for them. Because Peter made a really good point earlier that it might be quite easy to take a £50,000 short form application, but if that ain't enough, that gives you a difficulty downstream. And I've certainly dealt with a case in the last 24 hours where someone switched from a £100,000 loan, which would have been a CBIL, basically to a £50,000 bounce back loan. And I've just kind of said to them, now look, you need to make sure that's enough, because you don't or can't be going back on that. Peter, should we go on to the next slide?
Yeah, thanks, Andy.
And then we'll close the slides and we'll take some questions.
Yeah.
We could share these slides, this slide a bit later. These are the links that I would recommend for the business interruption loan. It doesn't have the bounce back loan on it, but perhaps before I circulate them, or Peter, if you want, whoever's going to do that, we add on the bounce back. Yeah. Maybe final slide. So, I guess in summary on my part, and then we'll open it up. The banks want to intervene with business support early. That's not been easy because of the queues that are coming through, but they do want the message we're getting from the banks. And I think this is legitimate. They're trying to help the business community. We need to structure expectations. The banks are dealing with significant volumes here at all points in their process. I think once you've got into the process, you'll see an end result, and hopefully it's the right result. But you do need to anticipate the speed that it's going to happen. Getting a turnaround in 24 hours isn't going to happen. It will take some time. So for speedy responses, bounce back loan is what you want. Message to applicants: please prepare your proposals well. I think they are overwhelmed, I guess, with queries. Could you do this? Could you do that? Could you do the other? And poorer quality applications. So advisors, please help in any way you can your clients, just even if it's a read through of the proposal or what they're going to say to the bank when they arrive. There's a question on new lenders which we can expand upon. The British Business Bank has been rapidly increasing the number of lenders from traditional lenders to challenger lenders. One that comes to mind is Starling Bank. It'd be good to get Peter's view on this, really, but my view to a business applicant is your existing banker knows you best, warts and all, and your best chance of success should be through your existing banker. Yeah. However, if your existing banker is a challenger bank, you can now go to many of the challenger banks and actually get a CBIL type loan. As I said, British Business Bank are widening the number of challenger banks on the panel every week, and I think that will continue to, in some way, take the pressure off the system with the major traditional banks. And as I always say to business customers, the most acute ones always used to have, well, Andy, I'm talking to you, but I've got some alternatives ready and available. We're unable to help. So always look for alternatives. If that is talking to one bank and starting conversations with another bank, or looking at alternative sourcing of finance in terms of that. And I think that takes us to the end, Peter.
Yeah, I think it does, Andy. I mean, I'd come in on, it is, as I said at the start, the scheme is boxed, by the British Business Bank. The banks have to abide by the terms to provide the facility, and that does include documentation that is relating to state aid and stuff like that businesses have to complete. But my view on, the new lenders certainly is helpful. We'll see what they offer. And also definitely approach your existing bank first. And the British Business Bank says to do that. Okay. I'll end the slide deck so we can see everyone.
Peter, there was a couple of questions which have come up in the chat, which probably we'll start off with, really, which I guess are for you. One is on interest rates.
Yeah.
Do you want to start with someone's 12 and 15%? I think there was ridiculous stories in the press early on, and I don't know how ever a bank had got to this. Thought he was going to charge an applicant 30% on one of these. Where's your thinking on pricing?
I was involved in the commercial type business in my role, and so the interest rates were certainly enough, and that business is turning over more than 2 million basically. And so interest rates were not within that sphere at all. And in NatWest, the interest rates that were being charged for smaller businesses were not out of line with what they would have been charged before COVID-19. And one thing that we were doing is basing the interest rates on the performance of the business before the crisis hit and not after, because as I said before, no business is viable now. The risks associated with businesses are far more, and therefore in theory the interest rate would be higher. But I can speak for NatWest and say we were not charging rates that would not have existed before the crisis.
Peter, there was another question on early repayment cost. Do you want to cover that one off?
Yeah. I'd say have a look at the terms and conditions that are being offered by the lender, obviously. For the ones that NatWest were offering, there was no early repayment charge, certainly in the commercial space, and I don't think in the British, in the small space either. But please look at the terms and conditions. As I was told by a banker who was as old as I am now, God is good, but get it in writing.
Well, I was going to say, sorry, that was a question from me, Jeff, today, is there's a strategic element here of, if you're looking at, almost for some businesses starting again, so you've then got almost a lead sales line. So I was talking to an estate agent where they've taken the CBILS and they got it very quickly because they managed their bank, they had a good relationship, and they got the loan very, very quickly because of that packaging that they put. So it is there. And when I asked, why did you go for it? Because I know you've always had cash flow. He said, well, my sales lead-in time is 6 months. So I'm going to go and turn around and use that for cash flow management. Well, I've got to pay my staff when we actually are able to sell houses again. It's on a 0% for 12 months with the hope that actually I'm going to then start turning over a sales cycle that I will be able to actually then pay my staff for that period of time. And if I'm in an okay position, I've got no early redemption charge, so I'm going to clear it. Now that to me was the most strategic answer I've ever heard from somebody taking one of these loans rather than I've got an opportunity for it, let me just go. So there is an element of how do you strategically overlay what does your business need versus where are you at the moment. And I think that early redemption charge is critical, because if you can't repay it early, then you're just saddled with a lot of debt over the next couple of years if you can't take yourself out of the hole.
Yeah, Jeff, I'll come in, and certainly, there was at least one of these things that I approved where that was quite absolutely right. The business thought, we'll take this now. Maybe we'll be able to repay it after 12 months. Maybe this thing will go on longer and we'll need it. They were going to lose money on, obviously, during the down period of COVID-19. Everybody is, but they had enough cash reserves. But what they didn't want to do, they wanted to take advantage of the scheme so that they, could bounce back quickly. And I don't think that's wrong. It's good business planning, and I think, as time goes on, people have got to think, how do we come out of this? What changes are we going to have to make, and prepare their cash plans accordingly.
Jeff, can I come in here? Just to support what Peter said, really, my experience of previous recessions what that applicant, what we saw in the estate agency, would be a rapid closure of their network and significant redundancies, and that will be their response. So it's actually quite heartening that actually that they're doing what the government's trying to achieve here, which is provide the opportunity for a quick bounce back, so you don't have to go expand your network and get your right stuff in. So that, it's a great story, Jeff. Thank you.
Yeah, they have to have a need for it, but I think the need is very, very evident in the period we're in at the moment, where premises costs, cost of maintaining vehicles, whatever it might be, rent rates, whatever needs paying, still needs to be paid. So I think businesses are going to be able to demonstrate a need and throw the strategic thinking in as well.
Have we any more questions from anybody?
Yeah, Mike. I just wondered if you've got any advice you can give to people and how to speak the language of banks when they're actually applying for a loan.
I think the case studies on the British Business Bank website are helpful. I think I would certainly advise businesses to talk to their accountant, and to join groups like this. I have spoken, quite happy to speak to, businesses, just have a conversation with them. That helps, Hamish. And I know that Enterprise M3 and, Paul, Andy and Paul, have been doing an immense amount of conversations with businesses and being immensely helpful in navigating them through. So it is using your networks and using your business friends. But I do, I've always been someone who would suggest that your accountant should be somebody that you can lean on and get some help from and have that relationship with your accountant. There's bloody good accountants out there that I know are helping many people. Andy, do you want to comment on the Enterprise M3 side?
Yeah, can I maybe just add to that a little bit, because a live case study I was looking at, a live study, not a case study, yesterday, basically, it was an applicant who had never borrowed before. They were profitable, but there was a history of losses in the past, and their balance sheet was insolvent. So it's a limited company, it was insolvent, and they were looking for a loan, I think of about £75,000. Now, the banks would look at that straight away and say, you're an insolvent balance sheet, how can we help you? But actually, by just looking at their overall balance sheet, there was an opportunity to propose to the bank that we postpone a director's loan, which actually, or postpone, or perhaps even capitalise the director's loan, which will actually adjust that insolvent balance sheet. So that's the kind of thing that will trip maybe smaller businesses up, where there are ways round it. And maybe that's where, in the end, they spoke to the accountant, and the accountant said, actually, we could do this. This is what we could possibly do. Or they didn't say, well, this was the eventuality of you running an insolvent balance sheet. But so I think I would just emphasise, encourage you as business owners, talk to other people, because sometimes there are solutions there which will make it easier to navigate through the bank. Yes, from an EM3 point of view, I know time's running on, but basically I'm just really interested in feedback that you've got. Pass it through me, pass it through Paul Cliff, I see on the call, and Paul Scott on the call, or into Peter. Please pass it. We're really keen to understand what the business community is thinking, what's the challenges out there, so that we can provide really live updates into government on a weekly basis about the challenges, and as well as challenges, what the possible solutions. So please use us in that respect.
Yeah, I will certainly echo that. The changes that the NEPs and the chambers of commerce are going in locally to the highest level. And I know Louise at Surrey Chambers, we seek feedback, we get the feedback, and it goes in, and it is helping to change and make and fill in some of those gaps. So please do what Andy says and feedback into him. And me.
What we are seeing from government is they ain't getting it right first time on some of these schemes, and I think they accept it. But bit by bit, with updates and adding additions to notes, we are able to influence and try to make those changes.